In August of this year, the S&P 500 climbed about 2.6%. Well, we can say that the stock market climbed this month. And despite the surge in COVID-19 cases in the United States, markets applauded a recovering economy. According to a report published by US News on August 30th of this year, late in the month, Federal Reserve Chairman Jerome Powell said the central bank could start tapering asset purchases later in 2021, assuming the labor market continues to recover. At the same time, he assured the public and markets that the Fed will not preemptively raise rates. I would say that the stock market has had a good year, and this is great news for investors. But it can also cause unease about the market potentially becoming overvalued. So what are some of the best stocks you could buy right now? What's up guys, welcome back to Glory Investing Show. In our today's video, I'm going to tell you about the 3 best stocks you should invest in September of this year. So if you're looking for great investment opportunities, make sure to watch this video until the end. However, before we go any further, make sure to subscribe to Glory Investing Show and don't forget to hit that bell icon so you never miss any updates. It was the year 2010 when Tesla went public at $17 a share. Now it has become the leader of the EV market. The reason why I'm investing in Tesla stock is that this company still has the potential to grow exponentially. The company is selling cars as quickly as it can make them. The American EV and clean energy company had the most sales of battery electric vehicles and plug-in electric vehicles in 2020. And Tesla's subsidiary, Tesla Energy, is one of the largest global suppliers of battery energy storage systems, with 3 GWh installed in 2020. Last year, the company started testing its full self-driving beta software with a select group of customers. Well, a report published by The Verge on September 7th of this year states that the company is now planning for a wider release of this software. And the report published by Forbes on September 9th of this year states, according to its latest earnings report, Tesla's revenues are up a whopping 98% year over year, and its stock is up almost 80% compared to this time last year. Its sensors and batteries, and will probably have a prototype next year. Let me tell you that this announcement was made as part of AI Day, which is a series of tech talks hosted by Tesla in California. It is important to note that the company had an output of 32,968 vehicles at Gigafactory Shanghai in July of this year. More than 20,000 of these vehicles were exported. Currently, the price of Tesla stock is $754.86, with a 52-week range of $351.30 to $900.40. And Yahoo Finance's recommendation rating for the company is 2.6, which means it is a buy. Next on our list is VC Properties, which is a real estate investment trust specializing in casino properties. The company announced on September 8th of this year that it has commenced an underwritten public offering of 100 million shares of its common stock. A report published by Business Wire on September 8th states the company expects that it will issue and sell 50 million shares directly to the underwriters at closing, and that the underwriters will purchase 50 million shares related to the forward sale agreements. And the company announced in August of this year that it is acquiring MGM Growth Properties. This makes it the largest publicly traded owner of casino properties in the entire United States. This company currently has a market valuation of around $16.45 billion, and it will release its quarterly earnings reports in October of this year. The dividend yield is 4.34% and its forward dividend ratio is 1.32. As per a report published by Stock Register on August 9th of this year, analysts have predicted the quarterly earnings per share to grow by $0.5 per share this quarter. However, they have predicted annual earnings per share of $1.98 for 2021 and $2.09 for 2022. It means analysts are expecting annual earnings per share growth of 13.10% this year and 5.60% next year. Analysts have forecasted the company to bring in revenue of $369.12 million for the current quarter, with the likely lows of $341.47 million and highs of $379 million. From the analyst's viewpoint, the consensus estimate for the company's annual revenue in 2021 is $1.5 billion. At the moment of making this video, the price of VC Property stock is $29.88 with a 52-week range of $22.13 to $33.35. The P ratio is 12.94, while the EPS is 2.31. Yahoo Finance's recommendation rating for this company is 1.6, which means it is a strong buy. Last month, I created a detailed video about this company. If you want to get more information about VC Properties, you should definitely watch the video. The link is given in the description box below. And lastly, we have Sea Limited. It is a Singapore-based tech conglomerate which was established back in 2019. It is a holding company from Shopee, SeaMoney, Garena, and the football club Land City Sailors. Garena is a game published and Shopee is an e-commerce platform. Let me tell you that the revenue of this company surged 147% year over year to $1.8 billion. You might also want to note that the adjusted earnings of the company before interest, taxes, depreciation, and amortization improved from a loss of $70 million to a profit of $88 million. There are several reasons why you should invest in C stock. First, the growth of its e-commerce platform is accelerating. The company's e-commerce revenue increased 160% to $2.2 billion in 2020. And during the first quarter of this year, the e-commerce revenue of the company surged 250% year over year to $922 million. Well, the gross orders of Shopee increased 153% to 1.1 billion. Also, Free Fire is becoming increasingly popular. For those who don't know, Free Fire is a self-published battle royale game that was launched by Garena back in 2017. The popularity of this game in Southeast Asia as well as Latin America boosted the company's digital entertainment revenue by 78% in 2020. And according to a report published by The Motley Fool on May 21st of this year, in the first quarter, its digital entertainment revenue surged 111% year over year to $781 million as its bookings rose 117% to $1.1 billion. Its number of quarterly paying users also increased 124% to 79.8 million, or 12.3% of its quarterly active users compared to just 8.9% a year earlier. The same report suggests that analysts expect the revenue of the company to rise 89% this year. Right now, one C Limited share will cost you $322.60. And Yahoo Finance's recommendation rating for this company is 1.7, which means it is a strong buy. The company is now aggressively rolling out Shopee to more and more countries. This year, Shopee entered Mexico, Chile, Colombia, and India. And this e-commerce platform shows no signs of slowing down. Recent reports suggest that the company is planning to launch Shopee in Poland, which will make its first foray into Europe. And the report published by Reuters states that Shopee will probably be launched in Argentina during the next few months. Well, that's all for today's video, and thanks for watching it. If you liked it, make sure to give it a thumbs up and share it with your friends. And don't forget to let us know what you think about this video in the comment section below. And lastly, if you have not already subscribed to the One Investing Show, click that subscribe button and press that bell icon as well so you will be notified each time we upload an interesting video on this channel. And while you're here, click to watch one of these two videos that are appearing on your screen. We'll see you there. Take care and stay tuned.